I'm John Hanna for CDTV.net, and we have Greg Womack, the president of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good morning, sir.
Well, good morning, John.
How are you doing today?
We're doing well. Did you survive the debut of Facebook? That's what I want to know.
Yeah, I was watching about that one, and there's even some articles about Facebook that who's the underwriter for them? It's kind of holding the line at 38 on Friday, so now it kind of crashed that line. Now it's down to like $34 or down 11% at what time is it? Like 12:41 Eastern.
Yeah, it's trading about 10% off
Yeah.
today, and I sent out a little piece on it that talked about not accepting it at this point because I think it's going to eventually come down. Most even your big like Groupon, LinkedIn, and Zynga, and all those have really come off their highs after their initial public offering, and you could have bought them a lot cheaper. I think this is a big stock. It's a lot of hype to it. I think Facebook is a technology phenomenon. As far as think about it, 900 plus million monthly users, almost 3 times the size of the U.S. That's just massive. They added more users last year, 220 million, almost 3/4 of the U.S. just last year. I think most of those were the unemployment of Spain and Europe. The youth unemployed over there have nothing left to do but to get on Facebook. But interesting, they'll have a lot of challenges ahead of them, but a lot of opportunities as well. But I do think you'll probably pick it up at a much cheaper price down the road.
Okay, so you're pretty much like on a wait and see. And also, other analysts are, I've heard other analysts are talking about whether or not that they're gonna be looking at those numbers pretty closely because they want to make sure that if they do go in for the long term, it's not gonna be something like a short ride for them.
Right.
What do you have for us on the market week?
Well, equities last week, John, saw the worst week of the year, marked by their 3rd consecutive week of losses. And they've sliced more than 8 percentage points off the S&P 500 year-to-date gains. The flow of euros out of Greek banks accelerated last week, raising concerns about a run on banks there and helping to increase demand of U.S. Treasuries. The 10-year Treasury is approaching an all-time low, and they had an auction of a 10-year Treasury inflation-protected securities, which is TIPS, resulted in a negative yield for the 4th consecutive time. So the euro fell to 127 as the dollar strengthened. Oil prices fell once again to end the week about $91. Meanwhile, gold bounced up nearly $40 an ounce after selling off over the last week. So the 10-year Treasury is at 1.71 as of Friday. We got the Dow up about 1.24%, S&P about 3%, NASDAQ 6.7% for the year. The big headlines are Greece. Greece will schedule new elections for June to try to elect leaders who can form a coalition agreement or government. A caretaker of government was named to keep the lights on until then. Meanwhile, Europe got a sliver of good news for a change as Germany's economy grew 0.5% during the first quarter, which is substantially better than the previous quarter's 0.2% contraction. So, growth was the focus of the G8 leaders attending the Camp David summit over the weekend. Their joint statement said Greece should remain in the Eurozone and that stimulating economic growth, not just austerity, is essential to the region's future. Then you had Spain's 10-year bond yield rose once again above 6%, roughly 4 times the yield on equivalent German debt. And a lot of that was due to Moody's downgraded the credit rating of a number of Spanish banks. And also you had a lot of reports that the euros were being withdrawn from Greek and some Spanish banks, potentially increasing the bank's difficulty in meeting the capital requirements. Back in the USA, declines in energy costs in April helped offset increases in the cost of food, travel, shelter, cars, trucks, and other medical health care, leaving the CPI index flat for the month. So the Bureau of Labor Statistics said for the past year, consumer inflation was 2.3%, slightly higher than the 1.9% wholesale rate. And we had housing starts were up 2.6 in April and up almost 30% from last April. And though the Commerce Department also, basically said that building permits were down 7% overall for the month, but still 23.7% higher than last year at this time. And then we had the Federal Reserve Open Market Committee minutes show that the Fed still sees moderate economic growth, but is ready to take further measure to support the economy if the situation in Europe worsens or physical and legislative policies increase the likelihood of renewed recession. Of course, we've got the elections coming up and the budget deficit and tax increases after January 1 if nothing's done. We had retail sales rose to 0.1% in April. According to the Commerce Department, they were 6.4% higher than last April. And manufacturing was mixed. The Fed's Empire State Survey of general business conditions for the New York area companies rebounded strongly from last month's 6.6 reading, rising to 17.1, and industrial production was up 1.1%. However, the same survey by the Philadelphia Fed turned negative for the first time in 8 months, declining from 8.5 to negative 5.8. So this week ahead, John, it looks like Europe will continue to dominate traders' mind as Germany and Spain are both set to auction bonds. And we have some pretty skinny domestic economic data. What data we'll have is going to be focused on housing. So we got home resales, on May the 22nd, new home sales on the 23rd, and durable goods on the 24th. John, I'm going to take next week off and take a little vacation time, so we'll see you guys here in a couple of weeks.
Alrighty. Happy Memorial Day weekend.
Thank you, sir.
That's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CityTV.net.